Imagine sitting across from a hedge fund manager who turned $27 million into $2.6 billion in just 30 days during the COVID crash. A man whose calls have made fortunes and destroyed companies. And he looks you dead in the eye and says Google is the greatest AI opportunity of our lifetime. So, you listen. After all, Bill Ackman doesn't make small bets. Throughout 2024 and into 2025, he was pounding the table on Alphabet, calling it undervalued while everyone else panicked about ChatGPT eating Google's lunch. But here's what just happened. The man who built a billion-dollar position in Google, who increased his stake by 21% just last quarter, quietly started selling. According to Pershing Square's latest 13F filing, Ackman dumped over 519,000 shares of Alphabet in Q3 2025. That's roughly a 10% reduction, not a rebalancing. A deliberate exit from a stock he publicly championed. He didn't rotate into another AI play. He trimmed, he pulled back. In a market where everyone else is pouring money into artificial intelligence, one of Wall Street's sharpest minds is doing the exact opposite. Let me take you back to where this all began. Bill Ackman isn't your typical hedge fund manager who flips stocks for quarterly gains. He's an activist investor, someone who takes massive concentrated positions in companies he believes in and holds them for years, sometimes decades. His portfolio typically contains fewer than 10 stocks. When he builds a position, it's because he's done the research and developed deep conviction. That's what makes this sale so unusual. Ackman doesn't trade, he invests, and he only sells for two reasons. Either the company is fundamentally broken, or the market is fundamentally broken. Since Google just reported strong earnings with revenue up 14%, the company clearly isn't broken, which means Ackman sees something broken in the market itself. To understand what he sees, you need to understand how he thinks. Back in February 2020, Ackman was watching COVID-19 spread across China, while most investors dismissed it as a localized problem. He didn't panic, he analyzed. And he realized that if the virus reached the West, the entire global economy would lock down. So he made a bet that turned $27 million into $2.6 billion in just 30 days, one of the most profitable trades in hedge fund history. The lesson from that trade wasn't just about making money on chaos. It was about seeing inflection points before the market does. Ackman has an almost supernatural ability to sense when conditions are about to change. And right now, his actions suggest he's sensing another inflection point. Here's what we know from the filing. Ackman didn't just trim a small position to rebalance his portfolio. He sold over 500,000 shares, roughly 10% of his total Alphabet holdings. That's a billion-dollar bet that the risk-reward equation has fundamentally shifted. And remember, this is coming from someone who was publicly bullish on Google just months ago, someone who defended the stock when others were bearish. But the sale itself is only half the story. What he's not buying is equally revealing. Ackman didn't rotate that money into Meta or Microsoft or any other AI-driven tech stock. He moved to defensive positions, companies like Hilton Worldwide and Brookfield Asset Management, real assets, tangible businesses with pricing power and hard infrastructure. That's not the move of someone who thinks the AI boom has more room to run. That's the move of someone preparing for what comes next. Think about the psychology here. Ackman just watched Google spend $91 to $93 billion on capital expenditures in 2025, with executives promising a significant increase in 2026. He's watching them pour money into servers, data centers, and AI infrastructure at a rate that would make most CFOs faint. And instead of doubling down on that spending translating into proportional returns, he's heading for the exit. The CapEx numbers alone should make every Google investor pause. Nearly $100 billion annually is more than the entire GDP of many countries. It's more than the U.S. Department of Defense spends on procurement, and Google has to spend this amount year after year just to stay competitive in the AI race. Not to win, just to stay in the game. Now, layer in the regulatory uncertainty. Google is facing not one, but two existential antitrust cases from the Department of Justice. In August 2024, Judge Amit Mehta